today's analysis is all about Bitcoin. I do recognize it's been quite a while since our last major Bitcoin market update. Our last major market update was around these areas, just analysing the potential psychological effects of this big wick to the upside, and we said that this was a potential market maker trick in the market, with one more load to come to reinforce that short psychology of the market participants to go ahead and break the ranges to the upside, in which case what we've seen today is a really big range break to the upside. We've been doing a lot of lower time analysis on Bitcoin on Twitter, pointing out some ranges, some liquidity ranges, taking the highs, taking the lows. We know what happened here. Just have a look at that. We took the highs with that wick there, and then we went to take the lows. Obviously, this is when everyone got really bearish, came back within the range, and absolutely sent it to the upside today. Really just updating the psychology of the market and how I've been just analysing people's sentiment just a couple of days ago, October the 11th, October the 12th, just saying it's boring around here. It's exactly how it's meant to be at this stage of the cycle. Stick to the plan. Saying I'm bullish, very, very bullish. Of course, everyone 5 days ago at this time. What time was it? 5:56. Big bearish candle had just come in the market there, October the 11th. Everyone really bearish down here, and that's when I'm saying I'm really, really bullish, and it's just really is psychological. It's hard to do. It's hard to foresee these moves coming into play when the fear is at maximum, at the maximum in the market, and everyone's calling for lower and shorts are piling into the market. But it is the way the market works. It is the way the liquidity in the market works, and it's really nice to see these big moves to the upside now in the market for Bitcoin. It's what we've been wanting. We've been wanting to see something like this for quite a while. We finally get to see it, and everyone's now asking, well, now what? So we need to delve into the wave structure and potential liquidity areas in the market we need to be watching out for. And the reality of what we're seeing here in the market is we're still in the absolutely massive range that we've been in for months. It's the monthly range that we've pointed out so long ago now, and people were saying, well, why was you not bearish down here? Why was you so bullish down here? Well, we was at the range lows. Not a single weekly close below this range, just like up at the highs, not a single weekly candle close above there. So why would you get so bullish up here when you've got wicks into the top of the range, presenting itself as the market makers building shorts in the market? Same again, big bearish candle, reinforcing that psychology, big wick to the upside, once again, people wanting to go in short. But again, the clues was given in this weekly candle here when the market did not close below the range. So we've seen the range highs, the range lows taken, and again, people may want to put the candle the candle wick range to the bottom of this wick, but I think again in the market that is once again another trick in the market. We need to be playing the ranges as they was presented to us. The high, the low, the highs have been taken, the lows have been taken twice. It makes sense now to push back up to the highs like we've been saying. Again, a big wick like this today will reinforce some of that psychology for shorts to pile into the market, just like they did here. We might get a bit of messing around here, a key cluster of consolidation here, order blocks in the weekly time frame. So zones where people are going to be entering trades, so it would make sense for the market to come up, fill some of this wick, go above, go below on the lower time frame, like what we've seen on the higher time frame up here with the highs taken and the lows taken. So again, not really a time we want to be entering or exiting the market. It's a time where we need to just sit back, relax, and watch the market play out, because as always, just judging how the market is moving here and how short stepped in at the lower bound of this range, I think the market has got enough liquidity now after so long in the market. Let's have a look at how long we've been in this range. We're talking nearly 220 days or even less, 217, 220 days. We've been in this range for so long now. We talked about this in the last Bitcoin video update. The ranges do not tend to last much longer than 200 to 250 days. So with us now working back to the top of that range, I would expect some lower time frame consolidation, shorts to start stepping in, maybe the market to come in, give the psychology of them shorts some reinforced confidence, and then really starting to break these ranges, because we've been looking for these higher time frame retraces to the upside for so long now. Obviously, it's always going to be hard to figure out how the market's going to move on the lower time frame, but realistically, just taking into account how low we are now in terms of retraces, still not a 382, Still nowhere, absolutely nowhere near 702, 786, them 40, $50,000 regions that we've been calling for since the bottom down at 15,500. So the idea remains the same. I'm still not going to change that idea. The market is proving very, very nicely done. People do want to enter the big bullish candles. People want to short the big bearish candles. Let's let them do that. These people are gamblers on the lower time frame. You can win, yeah, you can lose, but realistically, the big swing trades, the big swings in the altcoins, the big swings in Bitcoin are what we want to benefit from. So we don't want to be messing around in these stupid choppy ranges. Even though the analysis has been good, we have not been entering longs and shorts in these choppy ranges because we recognise the dangers. Even if you've got good risk management, the dangers of chopping yourself out in ranges like this and getting bored and impatient. It's just not worth the risk and it's not worth the stress. Let's sit back, relax, let the market do the work, let the market do what it needs to do, grab all of the liquidity it needs, and we will sell on the higher time frame retraces. And one thing I want to reiterate here is that we're not always bullish on Bitcoin. When we saw them big bullish candles come into the market back in March 20th, we saw it as a big, nice weekly close for Bitcoin, but we said that the trick here was to pull the 38% retrace on the big bullish candle, and we would get them targets around $25,000. And obviously, what we saw was a pullback to around 24,700. So just below 25,000, and even the second dip was below 25,000, 24,900. So we're not spot on here, and we're not going to get absolutely everything right. But realistically, if you're looking at market ranges, see the big bullish candles come in, and you call for the moves down, and then you get bullish at the range lows, and the market moves back up. It really is simple stuff, but people on Twitter really like to overcomplicate things and let the market psychology overtake them, let the market fear overtake their opinion on the market, and people end up missing out on major moves because of this. The psychology is exactly the same on the higher time frame as it is on the lower time frame, but when we draw them ranges of the highs and the lows and we see the market working its way through the ranges, working its way to the top, working its way to the bottom, we recognize that, stick to the higher time frames, and really embed the psychology of what we've experienced in the market in the past and how we can benefit from the market moving forward. Left them monthly candle ranges on the chart at 25,800 and 31,000, so you can see how pivotal these zones really are on the lower time frame if you do mark them zones out on your charts in advance. And you can see there was one main psychological dip below that range to really capitulate everyone out and let the market makers build them longs on the big bearish candles, only to move to the upside. And now we've got a big wick to the upside, just like on that weekly time frame. Market psychology, people will see this as weakness, but we know that wicks like this often do come in and get filled because big moves up induce liquidity. So realistically, on the lower time frame, would expect some form of fill of this wick, come back within the range. And again, if we're talking about Elliott wave and we're talking about this as a potential wave to the upside, then you'd be expecting somewhat of a free wave correction back to the downside. It doesn't have to be a 5-wave move this, but when we see wicks like this, we do see price action tend to come up, take that high and induce some longs into the market, come back down, and that's a nice running flat correction in the market. We can talk about Elliott wave, we can talk about liquidity and market psychology. It's all the same. Everything, every little bit of analysis that you see on Twitter or YouTube, it's all exactly the same, incorporating all the same ideas. But it just means you having the psychology to be able to push that idea and sit with it even through the times where it's giving you real emotional anxiety or fear. So would expect on the lower time frame price action to pop up above this wick, come back within the range, and overall work its way back up to the top of this range at around 31,000, and then again would probably see somewhat of a nice dip back within the range, and that on the higher time frame, nice running flat correction again in Elliott wave terms, working its way even higher. So I am expecting something like this on Bitcoin on the lower time frame, but overall expecting a major range break from this range. We've had a couple of fake outs to the upside already, one test, two tests, this third test. Expect a little bit of messing around, but I do think this is going to be the time we finally are going to break this range to the upside. I said the other day on Twitter that when everyone was really bearish down here, I expect big bullish candles for the rest of October. Perfect. What have we got? big bullish candles, work the ranges, and send it to the upside. So that is all, guys, and from me, it's not financial advice, just a bit of higher time frame, lower time frame analysis here. Hope you've enjoyed it. If you have, give it a like. Any comments, subscriptions always appreciated. Sit back, relax, let the market do the work, and I'll see you next time.